Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday, April the 3rd, 2020, and this is the daily report for gold and silver, our weekend review, and what a week it was. What a couple of weeks. The world has been ravaged by a pandemic. Of course, the coronavirus, that has affected not only the economies globally, but it's hit hard in the United States as well. The number of cases at this point has breached the 1 million mark, and this pandemic appears as though it will get worse before it gets better. Equities markets continued to drop this week, but the safe haven asset gold did move up. So there is some solace in the decline of the equities markets for our subscribers because they're long gold. We got long gold at 1602 earlier this week. We'll talk about our trade in detail. We'll talk about where we're looking to move our stops, but most importantly, where we think there's upper resistance and our exit strategy. First, though, let's take a look at the price board. Traders, it was another day of carnage for U.S. equities with all of the major composites trading lower on the day. The NASDAQ composite lost 1.53%. When we look at the Standard & Poor's 500, that also lost about 1.5%. And lastly, the industrials, they lost roughly 1.7% on the day. Dow Jones at 21,052. In terms of the precious metals, we had an interesting mix. While gold closed higher, substantially higher, up about $11, the entire complex itself was lower due to the industrial component. Currently, we have June futures at 1648.80, up $11.10. For those that are trading Forex or spot, up $3.50 at 1640. However, the rest of the precious metals complex in the futures markets all were lower today. Palladium, as you can see, was down $3.70 at 21.18. When we look at platinum, that was also down $5.40 at 724.60. And lastly, silver. Silver traded off by about 13 cents at $14.52. As you know, we are long from 1602. We put that trade on earlier this week. The first chart that we do want to look at before we talk about the trade directly is going to be a weekly chart. You can see the tremendous rise that happened last week. That's this candle. But we had a green candle, meaning that it is higher today than the open on Monday. But take a look at the range, a tremendous range that's dwarfed by the range of last week. With that in mind, we'll talk about our current trade, the patterns that we see, and what we can expect next week. We've just put up a daily candlestick chart. And if you recall from yesterday's show, we talked about the fact that we have identified a simple 3-day pattern that is known as a 3-river morning star. It involves the 3 candles that I've just highlighted with a box here, and in essence is a major reversal or pivot point identified by Japanese candlestick patterns. As you can see, we've just put a text box up on the screen which basically defines a morning star definition, what it means. But in terms of identification, there are only a couple of things that you need to look for. First, it has to occur after a defined downtrend. We certainly meet that criteria. The pattern begins with a long red candle, red meaning that it opened at the high and closed near the bottom. That's the first candle. The second one has to be your star, and a star definition is a small bodied candle that gaps below this red. To make it a 3-river morning star, it must be followed by this green candle right here. This green candle finishes the pattern off, and then when we look at today's rise of $11, that's this. This is the confirming candle. So the question becomes, where do we think gold will trade to next week, and what are the resistance areas we need to be aware of so that we can effectively move our stop up and capture as much profit as possible out of our current trade? Now, obviously, the first level we need to look at is 1647. That is the 23% Fibonacci retracement area. And as you can see, although it traded above it, it closed just below it. I don't see that as a major level, but it is a level we want to watch out for. The second level has got to be the top, and this came in about a week ago, and that comes in at about 1675. And then, of course, the 1700 mark that we have attempted to break on a closing basis. We've only seen it on an intraday basis go above that, and that, of course, is this candle here. So I do expect to see higher pricing next week. I expect it to break through the 47, and then we have to look to see how it reacts at about 1675. This has been Gary Wagner, wishing you, as always, good trading. Stay healthy. We'll talk to you on Monday for the next daily update and review. Bye-bye.